Cohen, and I'm the co-founder of Mazuma. I've been in the accountancy industry for about 18 years now, and I've been working with small and micro businesses for 14 of those. And one of the most misunderstood accounting reports out there is the balance sheet. It's hardly surprising. No one ever explains it to you. So I'm going to briefly go through what on earth a balance sheet is, what it's useful for, what sort of things you're going to see on it. You will have seen a balance sheet. You'll probably have seen it maybe in your own accounts, that weird report your accountant produces at the end of the year. Or if you haven't, you can go and download the accounts of any small company from Companies House, and what you'll most likely get is a copy of their balance sheet as at the last day of their financial year. All of that is public record for limited companies. Now, to the untrained eye, a balance sheet can look unimpressive and confusing. It's just a couple of columns of numbers with a few subtotals. But if you know what you're looking at, a balance sheet can actually be a really useful tool, especially in your own business. A balance sheet is essentially a statement of the financial position of a business that's listing out important stuff like assets, liabilities, and owner's equity at a particular point in time. So in other words, the balance sheet illustrates your business's net worth, and you'll most likely have heard that term. In the top section of the balance sheet is where we plonk all the assets. So this comprises fixed assets like equipment, plant and machinery, what I tend to call the big heavy stuff, as well as current assets like debtors, or you'll also see your cash at bank or bank balance listed in that section. If you've watched the video about profit and loss account, you'll know that assets like machinery get posted onto the balance sheet rather than the profit and loss account because of the long-term nature of their usefulness for the business, or their useful economic life, we call it, within the business. So that's why you see plant machinery, big heavy items on the balance sheet. And depreciation gets posted onto the profit and loss account to account for the allocation of that useful economic life of the asset. And because it's accountancy, all things in accounts have to balance. So we also post depreciation onto the balance sheet, and that's posted against the assets. So profit and loss depreciation, balance sheet depreciation, and that balance sheet depreciation reduces the value of that asset over the time. So you'll see that what we call net book value of the asset reduce over years to take account of that. And that's essentially the mechanism of depreciation. That's how that works. Next section of your balance sheet, you've got your assets. Now the opposite side, you've got your liabilities as a business. So your balance sheet is going to show the total of your liabilities, long-term liabilities such as bank loans, and then current liabilities like trade creditors. And again, you'll see the value of the long-term liabilities reduce over time as long as you're paying those loans off. Then at the bottom of the balance sheet, you'll see the retained profit or loss of the company along with shareholder equity. So that goes right at the bottom. Now, given the ever-changing nature of many items on the balance sheet, like your bank balance and your trade creditor figures, they change every day. A balance sheet is very much regarded as just a snapshot in time of a business's net worth. And if you may, as you have probably guessed and I've mentioned by its name, a balance sheet always balances. So the top half of the balance sheet will total, you'll see a total there, to the same as the bottom half of the balance sheet. There is an awful lot of detail that I could go into about the balance sheet and what it means, but I think that as a business owner, the main thing to remember that it is a place where you can see your assets and your liabilities. Think fixed assets like machinery, and then liquid assets like cash in your bank account, and your debtors or people who owe you money. You're going to see the totals of those on the balance sheet, and then you'll see the totals of your liabilities like your loans, your business credit card balances, your trade creditors, money you owe to HMRC and VAT and PAYE and other taxes. The balance sheet is where you can see all those items, and where you get that snapshot of the assets and liabilities of your business. And then finally, at the bottom of that balance sheet, you can see how much accumulated profit or loss that you have made over time. And also within there, you'll get to see how much has been distributed as dividends to the shareholders within the business. So that's not everything, but now you do know a little more about what that balance sheet means. So take a look at your balance sheet, and hopefully it's going to be a little bit clearer to you now.